All right, everyone. Well, I'm back in my office here after a great trip in Mexico, and I am currently sitting up $23,904.64 on the day, 4 times the daily goal. I was up 47,000 on Monday, 17,000 yesterday, 23,000 today. That's nearly $90,000. I'm closing in on 100K on the week, and it's Wednesday. This market has been unreal. Now, I'll tell you something. Today, I hit a high of $34,000 and I gave back 10 grand off the top. Well, that's not true. I gave back about 14,000 off the top. I rallied from 19,000 in the green back to up about 28,000. Then I dropped down to 23, and that's where I finished. So today was a day where I stepped up to the plate. I took that extra risk, and you know what? It didn't pay off. In this case, I could have walked away with more if I'd walked away a little sooner. But one of the things I always say is that for me, the best time to walk away is just after I've hit my peak, because that way I know I've hit the top and now I'm on the way back down. I won't know I've hit the top until I'm starting to come back down, because you never really know exactly, should I walk away now? Is this my high? Or maybe I'll keep doing better. So let's jump onto the charts. The only stock I traded today was THAR. Very disciplined today about not jumping into low quality setups early in the day. This was the only one I traded. So let me walk you through my day, starting with basically how I sat down and was looking at the scans this morning. So when I first sat down this morning at around 6:30, I was looking at the scans and we really didn't have anything that looked good. We had a lot of stocks that had higher floats, were slightly higher priced, and were just not within my wheelhouse. We have a gap up on Reddit. We have a gap up on, I think it's Snapchat. So we've got a couple of stocks that are gapping up that are large caps. These aren't stocks I would typically trade, so pretty much disregarding them, but recognizing that they will take some of the volume out of the market. Well, out of the market for the stocks that I prefer to trade. Because when you have something that's up, it'll be attractive to some people. And, Reddit is a sort of household name, so there'll be people who think, oh, I'm going to, trade this all day. And so anyways, that's volume that might have otherwise gone into THAR, but ends up getting kind of siphoned away to Reddit. The first stock that really started to pull away was ASPI. And I know some of you guys were like, Ross, I don't understand why you're not trading this. So when ASPI first hit the scan at about 7 a.m., I pulled it up and I said, you know what? It's a 49 million share float, so I'm probably not going to want to trade it. I pull up the level 2, and the first thing I notice is that it is easy to borrow. It is not on short sale restriction. It's an easy to borrow stock. And so what I kind of think about that is this is one that's going to initially be choppier. And what ended up happening right there at about 7:15 or 7:10 is it squeezes up to 766 and then drops all the way back down to 626. So it pops up, but it doesn't hold. It comes right back down. And of course, we see that on lower float stocks as well. So it's not, uncommon necessarily to see that kind of pop and then drop back down, but it's more expected to me to see that with a stock that has a higher float and is easy to borrow. So the reason that is the case is, number one, the reason the stock is easy to borrow is typically because the float is higher. So most stocks that have higher floats are easy to borrow. Who decides whether or not a stock is easy to borrow? It's the clearing firm that clears the trades for your broker. Your broker dealer is the front face that gives you the ability to trade on their platform, but they use a bank behind them to actually clear their trades. Most brokers are not self-clearing. They're not their own clearinghouse. It takes a lot of money and a lot of collateral to be your own clearinghouse. So most of these brokers use a third-party bank to clear all the trades. And it's the clearing firm that decides whether or not a stock is going to be easy to borrow, and that's based on their risk analysis of how risky is it that this stock could have an epic short squeeze, and all of a sudden clients get destroyed, and now the clearing firm is on the hook if the clients can't come up with the money to meet a margin call. If you have a margin call, you owe money to your broker. But if at the end of the day, you're bankrupt and you've got nothing, then the broker's stuck, right? So they manage their risk by restricting your ability to short stocks that are more likely to be very volatile. So a stock like Ford, Bank of America, these are easy to borrow. No one's worried about them going up 4,000% in one day. It's just not something that's a concern. But most lower float stocks, most of the biotech stocks that I like to trade are hard to borrow because even the clearing firm knows these are stocks that with the right news could go crazy. And it's just not worth it to make it easy to borrow, so they're hard to borrow. Now, there are obviously firms out there, brokers out there that specialize in helping short sellers find shares of these hard to borrow stocks, and you pay borrowing fees and this and that. But when a stock is hard to borrow, it greatly reduces the amount of people that are even going to try to short it, because now you have to pay to borrow, you've got to find the shares, they might be hard to borrow, et cetera, et cetera. So when I see a stock has a 50 million share float, it already doesn't fall within my 5 criteria of stock selection. My 5 criteria of stock selection, the maximum generally is 20 million shares, and I know that lower is better. Below 10 is better than 20, below 5 is better than 10. You know, the lower is better. And so today, what was THAR? I think THAR is like a million share float, which is fine. But ASPI, 50 million shares, it's too high. So I pretty much knew when I typed it in that it would be easy to borrow. And so what that effectively means is that this currently has 37 million shares of volume, and the stock is up 37%. But let's just say, you know, you've got 50 million people, 50 million shares out there that are up 37%. So naturally, there's going to be some people that want to take profit and sell. But right now, there's not enough volume to support every shareholder selling their shares for a profit. This is a problem. When you have a stock that has a 1 million share float and it's up 1,000%, you expect 1,000% people are going to want to sell. And if it has 100 million shares of volume, what that tells you is that everyone that was holding could have easily sold at the current prices. And so you don't have to worry about suddenly someone coming and dumping a ton of shares and having it drop, because the volume can support all of the existing shareholders taking profit. And then it continues going higher, and that's great. So ASPI doesn't have enough volume to support all the shareholders taking profit. And so as shareholders are taking profit, because there's more shareholders out there, the demand isn't able to support it and the price is coming back down. So generally, we expect higher float is going to trade with smaller range. It's just not going to make as big of a move. And when it's easy to borrow, more traders are going to sell into the move. So if it does start to break out, people are going to be quick to short it and it's going to come back down. Now, even in spite of that, ASPI did make a pretty decent move. It went up to 766, it pulled all the way back down, and then it rallied back up, but I wasn't interested in trading that because of the float and the easy to borrow status. It then grinds a little higher and pulls away here to a peak, but of course pulls back. So I had to be very disciplined not to trade it because it was moving and it did tempt me, but I just kept saying to myself, you know, based on your 5 criteria of stock selection, it's not worth touching. Again, I'll put the link to the 5 criteria in the description. I'll pin it to the top comment so you guys can download that if you want and use it as a reference. But yeah, so ASPI didn't meet those criteria. It did end up making a move. I saw some of you guys traded it, and of course, some people made money on it. But for me, I just said, you know what? I'm going to stay focused on stocks that I really think have the potential to do something big, especially considering the market that we're in. So then, let's see. So then one of the next stocks that pops up was DATS. So DATS pops up. It's got 2.5 million share float. It's not easy to borrow, but it's a little on the cheaper side. $2 a share, a little cheaper. And I'm familiar with this stock. And what I remember about this stock is that it doesn't make big moves. So now I've got a little bit of educated intuition on this because I remember the stock from previous days where it tried to pop up, had high volume, and didn't do anything exciting. So as it popped up, I just immediately thought, it's a little too cheap, and I know this stock, I don't really like it. I saw the headline, acquires a startup AI publishing firm. AI publishing firm, I think, I mean, it doesn't really matter what I think about the news, but, you know, we see a lot of these, you know, social media posts and articles that are being written by AI. So AI publishing, I just think that that's a fad. The quality is not good, and I think that eventually people are going to run out of interest in that. So anyways, that's just my personal opinion, but nonetheless, higher volume on the red candle. It's a stock that has a history of rejecting. So I said, nope, I don't like it. Didn't take any trades on it. Okay, so that was what time? That was about 8:05, 8 a.m., right around there. So there were some cheaper stocks on the scans. Wasn't interested in those either. And then let me think. One of the next ones that came up, really didn't have a whole lot hit the scanner today. It was kind of a bit of a slower day. I feel like, oh, there was, what was that one? Of course, I'll go over THAR in a moment, but there were a couple others that hit the scans. UAVS, they sort of popped up, dropped back down. That was at the open. I don't know. Anyways, so doesn't really matter. But there were a few others that popped up, and I kind of had a similar take on it. I was like, nah, not really loving it. Not really sure this is gonna work. I think I'm just gonna wait. And then THAR pops up. And when THAR first popped up, I actually said, I was like, I don't know. I'm not sure. And I looked at it and I said, the chart, it's a recent reverse split. It's been beaten up. I mean, the chart I like. 1.1 million share float. That's fine. The news headline's going to load in a second. But I said, I'm just not sure. And it popped up here pretty quickly from 2 to 350. And then there were some big sellers that came out right away. And as I kind of waited for the first, candle to make a new high, it just came all the way back down. So I was like, golly, I don't know about this. And then look at this. It rips right back up. So as this one curls back up on this high volume candle, I decided to get in. I was like, you know what? It's curling back up. The float makes sense. So I'm going to go ahead and jump in. Now on this one, so right now, because the market's pretty hot, I've been aggressive on pretty much the first trade out of the gates, especially when a stock meets all 5 criteria. So I bought 4,000 shares of this, and as it pulls away, I add another 4,000, another 4,000, another 4,000. So I'm in 16,000 shares, and I try to add again to 20,000. It ends up squeezing from 350 all the way up to 4. I take the profit out. My best exit was about 392. It wasn't a huge win there. But actually, no, that's not true. I did get a partial fill at 418. So let's see, was that on this candle? Might have been. So on this candle right here. So I got a nice trade with 20,000 shares on this as it broke through 350, adding right here for the squeeze up to 4. And I made about $7,000 on that first trade. Not a home run, but not a bad trade either. So now I've got a little bit of a cushion. I add back right here. And boom, next thing you know, it's going to 450 to 5. It goes all the way up to 6. So I made $34,000 on this in about 5 minutes right there, from 350 up to $6. But I made a mistake. Well, I don't want to say it was a mistake. I got a little aggressive and I gave back about 14,000 off the top. So what happened here was, if we look at this on a 10-second time frame, you can see how we got this squeeze right here. As I saw it pop up right there, I was like, okay, we're starting to pull away. And then all of a sudden, next thing you know, it's going, and I'm buying in this candle. So it pops up here, it drops down, it comes back up. So I add again, and then I'm adding here for this next trade higher. And notice each time, a little topping tail, little topping tail, little topping tail. It pulls back, and then it rallies up. It pulls back, and it rallies up. So right here was where I peaked at 34,000. And at this point, I was like, man, this thing is really hot. So I ended up adding back 30,000 shares right here as it squeezes through 6. And I'm looking for the squeeze up to 650. And in this point, this was my biggest, I think it was the biggest position I'd had on the day so far. And I was really stepping up to the plate. I was like, this thing is hot. Let's see what this does. And then all of a sudden it flushes back here down to 550 and I had to bail out. I had to stop out. So I ended up stopping out with about it's almost a 50-cent loss because I was in at about 6 and I stopped out at 550 with some slippage. So lost about 50 cents a share right there with 30,000 shares, lost 15 grand. That was my biggest loss of the entire, I think it was the biggest loss I've had of the entire month right there. So, I was like, went from 34,000 to 19,000 on the day. And I thought, oh boy, okay. Well, but it's still strong. I just have to be a little careful here. So it ends up bouncing, going down to 5. I end up adding like 5,000 shares or something small down here. We get a little bounce back up. I'm back up to 21,000. It comes back down. I got another dip, double bottom here, comes back up. I'm at like 22,000. Another dip, back up. I'm at like 23,000. Just making a little bit of profit. comes back up to here. I think I got to 24,000, dips back down again, and then below VWAP. And then as it comes back up right here, I got back in for the squeeze back up to 580. And it ends up hitting a high there of about 558, dropping again. So it started getting a little choppy. And I was like, all right, you know what? I'm kind of feel like I'm sort of churning shares, burning commission, and maybe fighting a losing battle. So at the open, it squeezes back up here. And on this rally, I got myself back to up $28,500. And then I'll show you, it's consolidating here. And I took a starter off of about 560. And the reason I did 560 was because we had this previous high right here at about 558. And I thought this was resistance. So now if we can hold above it, we should be in good shape. So I added right here, and then I added for the first 5-minute candle to make a new high right into that candle right there. I'm looking for that squeeze higher, and it flushes down to 540. Ugh. So now I'm back to 21,000 on the day. All right. So I'm like, man, this is really getting a little annoying. Coming into the open, I took another trade here. It pops up to 6, and then it does another jackknife right here. And at that point, I was done. So finished at $23,904. You know, the stock was strong. It ended up rallying all the way back up. I did not take that trade. I was like, nope, I'm done. I just, you know what? I don't want to overstay. I probably already overstayed my welcome a little bit. Now, if we go back to this trade back here, is there anything I could have, should have done differently there? To be honest, this could have easily gone to 650 and 7, and I could have been up 50,000 on the day. So I think given how hot the market has been, it wasn't unreasonable to think that that could happen. I didn't see, you know, we weren't like running into the 200 moving average. You know, I didn't see anything that was super concerning. You know, yes, like some resistance here, but I really didn't see anything that was super concerning. So I think it could have gone. It just, this time it didn't. And that's fine. Look, I mean, you know, stepping up to the plate and being aggressive is why I'm up 23,000 on the day instead of only 5,000. So you just have to know that you'll give back some off the top. That's part of the deal. And you want to make sure you're walking away with profit in your pocket. You know, the MACD was obviously still open on this trade here. By the time I was taking this 5-minute setup, you know, where I caught this jackknife, where was that? Right here, you know, that was a little later in the move. MACD was kind of crossing over. So I was getting a little stubborn. I really thought this thing was going to go. I was like, if it all it needs to do is break this like final level, and then we're there. And it just kept not happening. So I don't know, maybe there were just too many sellers stacked up on it. I'm not really sure, but in any case, it's currently sitting up 118%, which is impressive. And I'm grateful for the 23,000 that I've got on it. I mean, like I said, this month has been just unbelievable. I mean, I really didn't expect this at all. This is my year right now, 1.175 million. Better, my best year since 2021, better than 2022, better than 2023 for sure. In fact, I have made more this month. In 2023, I made $389,000. So as of today for October, I think I was at like 373 plus the profit from today is going to put me at like 386. So I'm going to round up a little bit, but this month, in 1 month, I've made as much as I made just about all of last year. 12 months of showing up every single day, 250 trading days, showing up every single day. And you know, I made more just in these last 20 days of trading. So that's the power of a hot market. I mean, the reality is, if you look at, I mean, you could say that about 2020 as well. In 2020, I made more in 1 year than I had made in my career up to that date. Now, this doesn't have my entire career in it, but I started using this software in 2016. But these were all 6-figure years, and they're decent years. But then to do $5 million in 1 year is incredible. So the market changed, right? All of a sudden, we had incredible volatility, incredible opportunity. It was the pandemic. everyone was trading. It was just insane. And then 2021, of course, we had GameStop, crushed that. That got the year off to a crazy good start, and it still stayed strong. 2022, what happened? Bear market, interest rates hiked up, everything changed there. 2023, continuation of 2022, and then 2024, things have improved. So this year, things have really started to turn around, and we look at 2024 in terms of, February was good, and it was a little slow, and then June and July were great, or July and August were great, and then September was a little slower, and then all of a sudden here, October, best month of the year. Didn't see it coming. So, I mean, you never know. But anyways, I'm definitely grateful for it. My metrics here on year to date are about 64% accuracy. Accuracy a little lower than normal, but 668 average winner, $480 average loser, and $5,900 daily average. If we look at the last, well, we could do the last 30 days, but that's basically just the month of October. We've already looked at that. So profit loss ratio 2-to-1, $700 loser, $1,400 winner, 64% accuracy. The only that'll hurt my accuracy will hurt, or my profit loss ratio will hurt a little bit from today just because of that bigger loss, but that's okay. And over the last 90 days or so, averaging closer to 10,000 a day. So, I'm trying to be aggressive. I'm trying to, capture as much as I can while the window is open, because I don't know how long it'll be open. Now, today, when I first sat down, I thought, I don't know, it could be a no trade day. I don't see anything I like. And I sat patiently. I said, nope, I'm not going to trade this. I'm not going to trade this. I'm just going to wait. I'm just going to wait. And I just kept waiting and waiting and waiting. And then when THAR first popped up, I didn't like it. I wasn't sure. We'd already seen a couple rejections. I just wasn't sure. It rejected. And then, look at that move. So pay attention to that, because that was pretty awesome. Even if you don't trade that first pop, usually I like to. But in this case, I just wasn't totally sure about the news, and I just kind of was like, I don't know, I can't quite tell. I was a little cautious. So anyways, it pulls back and then caught that next leg up, and that was amazing. So, and super solid volume too. I mean, some of the ones that pop up in one candle, $5 a share, but it's on 200,000 shares of volume or something, it's hard. I mean, you can only take so much size. This had hundreds of thousands of shares, millions of shares of volume in this ramp up. So that was a lot more liquid, a lot easier to get in and out. And, if it had kept going up to 7 and 8, this could have been, $50, $60, $75,000 day. But it ended up going from, about $3 to $6. So we got about $3 a share, $34,000 total profit on that. At the top was pretty good. Gave back a little off of the top. So anyways, that's it for me. Again, if you guys want to download that link for the 5 pillars of stock selection, pinned at the top of the comments. If you want to do a 2-week trial at Warrior Trading for $20, you can use this software, the scanners, the charts, the news feed, and you can listen to my broadcast and be in the chat room for 2 weeks and see what it's like to be part of this community. We'd love to have you guys join us. So check out the 2-week trial. And I'll remind you guys, as always, look, trading is risky. I have been doing this for a long time. So I want you to assume as a beginner that you should always be practicing in a simulator and prove that you have what it takes to be profitable before you put real money on the line. All right, that's it for me. I'll see you guys back at it first thing tomorrow morning.